Today we will talk about XRP, XLM, and how they are concentrating on their own parts of the new blockchain infrastructure financial system, where in my mind, they will essentially be connected into the exact same huge amount of value, which could make each of them extremely valuable on their own. Banks seem to like Ripple, and it's not commonly understood how much Ripple and Stellar are in the minds of the financial elite while they are restructuring cross-border payments internationally. Ripple and Stellar will be foundational in the market infrastructure of the new financial system. And you've got XLM and XRP here. Here is a clip of even Barry Gensler explaining how important XRP actually is.
To go between Tanzania and Nigeria, you need somebody to bear some counterparty risk that the ledgers both move and are adjusted at the same time. And usually it's a bank that is in both countries. You could use blockchain, but the current thinking is you need a bridge currency in between, and that bridge could be a stable value that's backed by the US dollar or the euro. It could be a currency even like Ripple has an alternative.
And now we have the Ripple stablecoin coming out, and you have XRP itself. So I do want to introduce all of the content after this with the explanation that it's a very difficult topic that I'm still trying to piece together as I interpret things. And this will be more of like a stream of consciousness than being able to piece together particular examples that can quote unquote prove this. But the big point is that because XRP and XLM are both connected in ways that are more private concentrated and public concentrated, in order to concentrate on each of those two areas, they need to touch the entire value that is in the financial system itself. So if you explain it in terms of an equation, if this is $1 here, then in order for the private side to match the public side, this has to be 1, and that also has to be 1. So I am not a financial guy, and I'm not an economist, and I'm not an expert in blockchain either. But in order to make everything work, you have to be able to have multiple things that touch the same value that is represented in the real world. And an example coming out of the BIS is Project Orem, which is a 2-tier retail CBDC. And if you scroll down, it talks about a wholesale interbank system and a retail e-wallet system with 2 different types of tokens: intermediated CBDCs and stablecoins backed by CBDCs in the interbank system itself, which is pretty close to what I am actually trying to explain here. And it makes sense that things involving XRP and XLM could be heavily involved here because it connects into essentially everything else. It's got ties into IBM, which connects into Hyperledger, WorldWire, R3 Corda, and then you have the heavy connections into things like SHX and Velo, but you've also got HBAR and Casper and Quant because of the involvement with IBM. So for example, all of this in my mind has been a plan from a long time ago. So for example, in terms of SHX and Stronghold, they commonly talk about how they opened up in 2018. But as I have explained in the past, you have Action Factory Inc., which will do business in California as Stronghold. And this has Tammy Camp's name on it, and it was put in on July 1st of 2013 before Stellar and XLM were ever officially created after Jed McCaleb left Ripple and XRP in order to create Stellar and XLM. So that right there is just another example of how the interconnectedness in between XRP and XLM all goes back into my hypothesis that you'll have things like XRP and XLM that are overlapping in some ways, but they will have their own concentrations. And because of those overlapping concentrations, they will have to be connected into the same value. And then the value of those networks and coins and tokens will have to be at an extremely high value as well. And a lot of it comes down to the introduction into tokenized deposits and stablecoins and CBDCs. And XRP, as I have talked about in the past, has a lot of ties into tokenized deposits. And this is from the IMF, and it is explaining how tokenized deposits issued by a bank were interchangeable with tokenized deposits issued by another bank, and how the tokenization of deposits means that bank depositors would be able to convert their deposits into and out of digital assets. Here's an example of HSBC that is currently being serviced by a Ripple acquired company called Medico, and how they have been involved in tokenized deposits. The only scalable way to bring traditional financial assets on chain is to use the banking system to tokenize existing bank deposits. And this is from the New York Federal Reserve. A CBDC is a direct liability of a central bank, while a tokenized deposit is a liability of a commercial bank, which is why Wall Street doesn't want CB. Crypto may be the answer to fix the global financial system, which is why the IMF and the World Economic Forum are in talks with Ripple to form a new stable bridge currency to provide a stimulus. And of course, that can also tie into what we hear from BRICS now and how they are exploring a stablecoin as well. Here is the BIS talking about how a third-party currency with sufficient liquidity is required in cross-border payments.
With all that in mind, how do we deal with this issue of exchange rates and interoperability? How do we get these digital currencies to really just talk to each other?
Yeah, that's a good question. And I think we talk about interoperability. We can at least in three different levels. So the first level is how we manage domestic interoperability. So how we generate this digital currency solution and make this speak with the other things that are out there in a little bit in the generating a platform so that everyone can connect to that platform and take advantage of the huge network externalities that we can get out of there. The second level is how do we manage cross-border transactions, even within the same currency, and that presents a certain level of challenges there. But when we talk about cross-currency and cross-border, then we face a completely difficult environment, and we can see three dimensions here. One is the technical dimension, so how we manage to get a system that speaks in a certain cryptographic language to speak with another that speaks another slightly different language. So that is one level of complexity. We need to get the technologies to speak to each other. The messaging element is fundamental. The second dimension, which is much more complicated to solve, so that one, the first one was the easy one, okay? And there is a lot of money that is being put in terms of trying to solve these technical issues of interoperability. Now, the second one is more complicated. It has to do with liquidity. So imagine that you have a pair of currencies for which there is not a complementary demand. You need to go and search for a third-party currency in order to make this settlement happen. And this really complicates things. So we need to put pieces of technology that can make more efficiency this use of liquidity so that more transactions can be settled. The third dimension, which is even more difficult than the previous one, is how do we manage to get homogeneity in terms of the policy requirements on different countries. And this becomes even more complicated when we think about, for example, AML-CFT and principles-based policies, and when we think about risk-based policies. We can code things that are very clearly stated, but talking about principles-based regulation, this thing becomes really complicated, especially in an environment, as Tom said, in which 110 nations might have 110 different ways of looking at this. So we need work in these three dimensions: technology, liquidity, and also, and more probably, in the policy side of things. Think about AML-CFT, but also think about privacy. Different countries have very different views on this, no?
Which all of that ties into ISO 222, and how Ripple has its ILP, and how the Stellar consensus protocol itself is a non-profit entity in the SDF, and things like SHX and Velo are essentially L2 applications on top of that, which makes Stellar and XLM extremely attractive as well. Out of all options, why would banks choose Ripple and XRP, or now the stablecoin? Because they have the most interest and adoption with central banks and other large financial entities. Stellar and XLM have a ton of their own ties, and I would say after that you probably got Quant and XDC. But it's hard to argue that Ripple is not the most connected one at this point in time. And they are an institutional favorite thanks to its partnerships with huge banks and financial institutions. ISO 222 is a concerted effort to put XRP in the forefront of international finance. Even mentioned is that systemic hegemonic currency can be a stablecoin backed by a basket of deposits at different central banks and be issued by the private sector, and then goes on to only highlight XRP. But if we go back to Project Aurum, that talks about a two-tier CBDC that involves tokenized deposits, and how XRP and XLM are each heavily intertwined, and how they also overlap, but they also seem to be concentrating on their own things as well. That lines up extremely well with what is explained here. XRP as a bridge currency for liquidity of any value, including gold or securities. And there has also been talk of XRP itself as being stable, and that also applies to XLM. And a lot of that is because of the introduction of AMMs into their own protocols, but it is also called out in this 2021 World Bank document explaining how XRP and XLM are both stable with respect to their against fiat currencies because of their instantaneous processing, which also come back to how XLM and XRP each use a federated Byzantine agreement, which does not have any third-party payouts like proof of work or proof of stake. Even Deloitte created an app on only Ripple and Stellar. Swift and Ripple documentation explaining how it can simply integrate with a bank's back office system in a matter of weeks with bank grade security. And there are also ties into the U.S. Faster Payments Council.
Hello, everyone. I'm Pat Thielen. I'm the Vice President of Global Account Management at Ripple. We truly believe that there is an internet of value coming, much like the internet provided with communications and email and through the beginning of the millennium. Today, the payments is advancing. And unlike a lot of the other crypto players in Ripple's space, we truly believe that the revolution is going to occur from within. So the ecosystem that the U.S. Faster Payments Council has put together will be those players that will make sure we advance the industry. The working groups that are coming out, it's the cross-border, the QR, the directory model. These are really opportunities to take that user experience, the interoperability that has been designed in the other initiatives, and really apply it to real-world problems. Many countries have leapfrogged the U.S. in real-time payments, so this is a real opportunity for us to leverage a body like this. The playing field is set, and you can either sit on the sidelines or suit up with U.S. Faster Payments Council and change the game.
Ripple's Interledger protocol can interact with banks' existing infrastructure and SWIFT. The Federal Reserve will allow the use of joint accounts with private sector instant payment services in real time on its private ledger for now. And coming back to how AMMs help XRP and XLM be quote unquote stable. Each of them prioritized an AMM instead of smart contracts. The CEO of Swift is here and said that Ripple's value proposition is XRP.